heading south. And then in March, things really took a leg lower where public companies were trading cheaper than private companies. That arbitrage spread went opposite than it historically does. And then in the subsequent months, we saw a massive snapback in public companies, but not much has changed at all, or to your point, have gotten cheaper on the private side. So now you have one of the richest public-private arbitrage spreads we've ever seen in cannabis.
From MJBulls Media, it's the Raising Cannabis Capital Show. Today at Raising Cannabis Capital, we are continuing this year's Cannabis Investor series with another former guest and fellow Buffalo, New York native, Morgan Paxhia from Poseidon Asset Management. Morgan, welcome back to the show.
Thank you for having me.
Well, it's great to have you back. And as I mentioned, you were our guest on last year's Investor Series, and we talked about how you got started in the early days of investing because you were one of the original cannabis investment firms. And so if our listeners want to get caught up on Poseidon, I want you to go back and listen to episode 157 because we have a lot of new stuff to talk about today. So much has changed, Morgan, since we last spoke in November. Let's start today's conversation with your portfolio companies. How has the pandemic impacted them? What's changed?
Yeah, it's kind of hard to even think about what we talked about back then versus where we are today. Some of the positives that have come from this, I'd say within the industry generally and what we've seen specifically within our portfolio is been a tremendous amount of focus. Part of that has been driven by the fact that the C-suite of cannabis has not been able to travel like we did historically. So everyone just kind of had to hunker down and focus on their businesses. And that's starting to produce some really good results, very good fundamental improvements in their operations. And it happened at the time it needed to in this industry. You know, seeing the industry going into the Darwin phase where you had just a kind of a separation where the stronger, better capitalized companies would start to separate away from the weaker companies. Yeah. And that's exactly what's happened. You could argue that it may have accelerated that path. And, you know, the other thing that's been really positive is not only just the focus, but the shift from the consumer. California has been battling a very entrenched illicit market for a very long time that was getting stronger going into COVID. Okay. And now we're seeing a retrenchment of the illicit market because consumers, I think, are just so concerned about what they are consuming because of a pandemic. And so now they are opting to buy legally, that products are tested, that they're produced by licensed manufacturers, licensed growers, licensed distributors, licensed retailers, giving them that comfort. And that's fantastic.
That's a really interesting point that you made. And I don't think people appreciate just how gigantic the illicit market is. I mean, we're not even close to half of what the illicit market is. And so the fact that we're chipping away at this, or COVID-induced chipping away at this, is really positive. And there's other positive things that have happened. I mean, the fact that we were deemed an essential service kind of reinforces the belief that eventually it's going to be legal nationwide. You invest in a lot of private companies. Yep. We're hearing that valuations are a little lower than they were at the beginning of the year, and that now may be the right time to invest. Do you feel the same way?
Yeah, so it's been really interesting. As back in March, public companies were just careening south, right? They've been on this multi-month bear market, very similar to the dot-com bust, just heading south. And then in March, things really took a leg lower where public companies were trading cheaper than private companies. That arbitrage spread went opposite than it historically does. And then in the subsequent months, we saw a massive snapback in public companies, but not much has changed at all, or to your point, have gotten cheaper on the private side. So now you have one of the richest public-private arbitrage spreads we've ever seen in cannabis, where you have very good fundamental private companies, but big capital has not come back. What little capital there was in cannabis in Q1 completely is gone, and it hasn't come back really. Anyway, so to your point, yes. And so for us as investors, and we think a couple of things will happen is one, money will start to come back, and you're seeing on the public side first, as I was mentioning, and that's just because people are still skittish and they like the idea of liquidity. But then when they start to see how vastly different that spread is, they will start coming into the private markets. I mean, it's crazy. I mean, you could look at some of our private companies that just recently made some news. Ascend Wellness Holdings
I saw that.
of a definitive agreement, with the Illinois operation, $68 million. That company is fundamentally is right up there with the top public MSOs, but trading at a fraction. So should they go into the public market, multiples return on investment.
Mm-hmm.
But in the meantime, it's a very attractive time to be in the private markets.
Well, you guys seem to be positioned perfectly. You have capital. What verticals do you like?
Areas we've been investing for years. Like I mentioned, Ascend, that is a multi-state operator. We're not generally looking for too much in the multi-state space anymore. We think it's more interesting if you actually break it into single state operators. We love California. We think it's got to be one of the most misunderstood cannabis markets because it's hard. It's one of the easiest markets to lose money in. But if you're a good operator, it looks a heck of a lot different than it did 12, 18 months ago as far as the fundamental metrics. So we like California from a plant touching side of things. And then technology, still love tech. It's just there's not too much there. It's not a massive market, but we just still see so essential. Like we just did a bridge round of financing with Headset. It's just so cool to see that platform as it just keeps getting bigger and deeper into the industry. Right now, today, that platform sees 25 cents out of every legal dollar transacted in the United States cannabis.
Oh my gosh.
Yeah. So their data insights are incredible. I mean, we're on Headset every single day. And I don't know how every MSO is not on it every single day or has a team on it every single day. If you're looking to go into a market, if you're looking to do M&A, it's one of the most powerful tools, and it's right there.
A lot of our listeners, especially now, maybe some of them are coming back to invest in public companies. But a lot of them had a bad taste in their mouth about public companies. And, we talked about the privately held companies. But just by your vantage point, you see way more deals than any individual investor could possibly see. In addition to that, what are some of the other advantages that an investor would have working with Poseidon?
It's time in the industry and our dedication to trying to bridge the gap between our obligation to our investors and being founder friendly. That is a constant push and pull. But we ultimately believe that if you get behind the right companies, the right teams, the right areas of the market, the returns will follow. And we certainly underwrite our return profiles. We do that process anyway, but you're never going to get there if you're not backing the right companies and that are in the right markets. For us, it's our network, it's our experience. And to your point about the public markets, we've known most of those companies that went boom and bust, and we knew they were bad news bears years ago and just waiting for it to play through. And it's unfortunate. I understand from it, a lot of investors, that is their only access point is the public market. And as much as we try to caution that it's not going to end well for most of them, it's the nature of the beast, unfortunately. But you're seeing the transition starting to happen where we're starting to see trickles of institutional capital coming into some of these public names, which will ultimately build into a much longer, durable opportunity set because they're not fleeting capital, because their time horizons are not a day, a week, a month.
Right.
They're looking at, this is cannabis going from 13, 15 billion, from a year ago was 8 or 9 billion and heading to 50 plus billion. So they're looking at the next multiples to get that capital duration. They're willing to stick around. That's the great thing about some of the funds like us, being a fixed life fund, knowing where that horizon is going to be and believing that return environment will pay out as more and more institutional capital comes in. The question that we always get is how did you know? How did you know to get behind GTI and not X, Y, and Z? It's back to the people. We saw Ben and Andy and Anthony, and they really were not getting sucked into the noise and chaos. And they've just stayed on that mantra.
I think really just the fact that you have been in this since you're one of the first investors, and you've seen the ups, the downs, you've seen the good actors, the bad actors, and just your point that you made about California. There's tons of opportunity there, but there's tons of peril there as well. And I think that if I were talking to an investor, I would say that it probably makes a lot more sense to work with a firm like Poseidon than to try to go off on your own and try to cherry pick. And it's just too much peril right now. And I have all of Morgan's and Poseidon's information in the show notes. You can just click the link. So if you're a company that's looking to raise capital, or you're looking for somebody to manage your cannabis investments, I'm sure Morgan would be happy to speak with you. Morgan, I wish we had more time today. We have a lot of stuff that we didn't get a chance to touch on. So we'll definitely have to have you back in the spring.
Well, yes. Yeah, that'll be here before we know it. But thank you for having me on.